So to start with, we want to be looking at the UKOIL, which we talked about yesterday. And the first thing I will do is to remind you of what were our expectations were on the euro on the UK oil. Well, first and first is that remember I told you how I believe more in the long-term perspective on any commodity or financial instrument I look at. And we identified this bullish trend line, this temporary bullish trend line we identified here on the, I think on the 2 hours or 4 hours time frame, I guess. I think it was a 2 hour time frame we identified that trend line. Yes, we identified this bullish trend line where we saw that price has been respecting that trend line since we saw the retest of the major trend line we identified on the day time frame. We continue to see higher lows and higher highs until we saw this area. So we were at this area yesterday when we did our live session, and I said personally that based on a long-term perspective, I want to be looking for a breakdown of that trend line where I will be looking for a retest of the zone, then price move into that key level where I look for opportunities to go to the upside. However, I stated that for those who are not patient enough for this move, that is the long-term perspective, that there is a scenario we can look at on a lower time frame. After which we went down to the lower time frame. I think it's on the 15 minutes time frame, I guess. Yes, on the 15 minutes time frame. And I identified this key level at 114,200, where we said that we will be looking forward for, even this is still here. I said we will be looking forward. Price was actually here at that particular point in time, and I said we'll be looking forward to see a possible reversal structure rise above that key level, which happened anyway. And we saw price moved about how many pips was that? Moved around 120 pips move before we saw that that crash downward. So definitely, if anyone had taken this trade, definitely you would have moved your stop loss to break even, because that is very pertinent at that point. And I used to say on a short-term perspective, things can change very, very swiftly that you might not have time to make adjustments that is needed. So that's why personally I normally prefer doing the long-term perspective. So if I'm doing the short term, definitely I'll try as much as possible to move my stop loss as price action moves in my favor. Oh, Can, glad to have you around. How are you today? So, that is that on the UK oil. So we saw the breakdown of that, and if you are taking advantage of that, you see, we saw the breakdown of that trend line, we saw the retest of that key level, we saw another retest of that key level, which gives us a structure that supports a downtrend continuation. So if you are taking this trade, kudos to you. That's how many pips thereabouts? That's over 300 pips. I think it still move. Yes, we have 300 pips, and prices come back into um we can see that after that move downward, we saw price appears to be doing a correction phase where which looks more like a retracement into that key level area where we'll be looking for another opportunity to take advantage of a sell momentum if it finally happens. And that is, remember yesterday we were looking at the key level at 109.30, where we are looking for structures that will support that bullish move we're expecting. So that is that on the lower time frame. So if we go closer to go up a little bit to the higher time frame, and look at what structure is giving us on the higher time frame, we definitely have this scenario that we have an impulse leg here to work with at this point, which looks like this, and we want to project this impulse leg into the future, where we will be looking at a Fibonacci extension of that impulse leg with a profit target around 119 thereabout. So how do we take advantage if this bullish move happens? That is, if price does not come down to 109.3, definitely we could be looking for an opportunity to take advantage of that bullish momentum going forward. So the first thing first we look at is, after every impulse leg, we understand that there is a retracement phase. Okay, we'll look at US oil. We'll look at it. And I think the US oil and the UK oil are very similar, but definitely we'll look at US oil as well. So with this impulse leg, we want to run our retracement tool through this impulse move, where we will be looking for a retracement into the golden zone area, where we will be looking for an advantage for that proposes a bullish momentum. So if we run our Fibonacci retracement tool and we have the golden zone right between 50% retracement and 78.6% of the last impulse leg. So we have a buy opportunity zone here on the 2 hours time frame. We have a buy opportunity zone within. Okay, hold on a second, please. Let's give this. So we have something like this. And so we can delete our retracement tool right now since we no longer need it. So identifying that, we need to identify our take profit target as well. And that will be the extension of that impulse leg. And if we bring out our extension tool as well and run it through that impulse leg, we'll have something like this. So we will be aiming at 127.2% extension of that impulse leg, which will definitely look more like this. So we will be having 118 area as our take profit targets for the meantime, or probably 119 if you're 118 or 119. You can put yours at 119, but I'm looking at a maximum of 119 area. You can put yours at 118 if you don't mind. And we want to be looking for entry point right within the buy opportunities. So now that we have price appears to have tested that area, I think around 618, and we continue to see higher highs, which projected into something like this, and we will be looking for structures that will support a trend continuation to the upside. So how do we take advantage of this opportunity? So on the 1 hour time frame, the only thing we can decipher on the 1 hour time frame is that we can decipher the buy opportunity zone and we can decipher where our take profit target is going to be. However, if we really want to take advantage of that impulse, of that move, we need to first of all look out for a key level that will be our guide going into the New York session, the UK New York session. I think let me call it that way. So bringing out our line chart at this point and looking for structures where we can actually use to play around going forward, then we will be looking at somewhere around this area, which at one point in time has a level for selling opportunity and at the same time buying opportunity. And then we want to see that this level also has a character in the sense that we have either a breakout or a breakdown at this key level at one point in time in the past. So our key level is always gold. Let's give it that gold color. And then we have it right at which area? 112.5 thereabout, I think. So if you allow me to label this at key level at $112.500, we have it around here. So let's keep this at the top so that we can see what we've been talking about. So we now have a new key level at 112.500. So going back to our candlestick chart rather. Since we have a key level at this area, you can see what I'm talking about at this point. We already have a breakout of that key level. We want to be looking for structures that will support a trend continuation to the upside. So for me at this point, it is safe for us to enter a position right above that key level, which for me will look more like this. So if I have our entry point around here, then we move it right into this area. And then you need to really check if you can afford the stop loss. And this depends on your account size. So you can really check if you can afford the stop loss. Then that's around I'll prefer 110 at this point for my stop loss. Oh, that's too much. Let's look left and see where structure gives us. Okay, let's have it right below the last low. Right below the last low, and we'll be having around 180 pips as our stop loss on this one. So in addition to what we've discovered so far, it is appropriate to note that above key level 112.500 is the most appropriate place we want to take a trade, a buy opportunity, as anything below 112.500 will render this setup invalid, as we will be looking forward to a retest of this 109.300 for that buy opportunity. So allow me to extend this. I think 310 will be fine. Let me use 320. Okay. So, and the reason why we want to be looking for a retest of 109.300 if the setup here is disregarded is because of that impulse move that went. We saw this correction. We saw something like this. And if we definitely see a breakdown of that key level, we want to see a retest of that structure where we look for a quick rejection of this area, where we look for a reversal pattern that supports a trend continuation to the upside. So hold on a second, please. So this is what we'll be looking out for on the UKOIL at this point. So permit me to look at a lower time frame, please, so that I can see what this pattern is doing at this point. Okay, we have something like this, yeah. So on the 15 minutes time frame, we can work with a trend line. We have a trend line already in lining up for us, a bullish trend line lining up for us that we can use to guide our action going forward. So let's have something like this for the meantime, and yes, let's have something like this for the meantime. So going back to my candle charts, then we will be looking forward to, okay. So what this simply means is this. Let me give this line a gold, because in addition to our key level at 112.500, we want to be using that we want to be using this trend line to guide our action going forward. So we want to be looking for opportunity lining up right above that trend line to support that bullish momentum we're expecting on the UK oil. I hope I've made myself clear on this one. I don't know if you have any clarifications or questions, or you need additions to this, please.